Hey everyone, I got a really exciting show for you today. First and foremost, we are bringing back a rock star guest in Steve Trang. But today we're actually going to talk about Phoenix. You know that I have been looking at various markets across the country and they are acting unusual. So Steve knows Phoenix and I'm like, dude, got to get him on, see what he's talking about. So let's welcome Steve to the show. How you doing, man?
I'm doing good. Thank you for having me. I don't know about rock star.
You're modest. You are quickly becoming a legend in helping people across the country. So,
well, I don't mind that.
there you go. There you go. So, let's talk about Phoenix. Why don't you introduce the world to who you are, what you do, then we'll get kind of focused on the Phoenix area.
Sure. Yeah. Steve Trang. I've got a podcast, Real Estate Disruptors. We do sales training. We help people do better, meeting with homeowners and communicating better, which is ultimately what it comes down to. If you want to work with somebody, you're selling you. You're not selling a product. You got to sell you, and you can only sell you if you really care about them. Right. And so we do sales training. I got a brokerage, about 120 agents, almost 1% market share in Phoenix. So that's another reason why I care so much about Phoenix, because I've got a lot of business that are very real estate related in the Phoenix market.
Yeah. Well, we're going to spend most of the day on Phoenix, but I want to give you a shout out for your sales training. You probably don't know this, but I was in enterprise software sales for the better part of 20 years. I've had sales quotas ranging from 5 million to over $1 billion at different levels.
Wow.
So I've been through all kinds of sales trainings, as you would imagine. Mm-hmm. And what I've seen you do, both give away for free and in other vehicles, is quite frankly some of the best conversations and the best stuff I've seen. And that's coming from somebody who's probably been through 1,000 hours of this and that sales training over the years. So people, if you're in this business and you're looking to grow and you need some help talking to people and really caring about them and getting to it, you need to look Steve up because he's got it. And it's some of the best stuff I've seen across the board. So congratulations.
Well, thank you. And like you, I've invested not as much time, but I've read a ton of books and I've gone through a bunch of trainings, and there's some crap out there and you don't know it until you pick it up.
Exactly. Well, hey, let's talk about Phoenix and that 120 agents. How long would you say you've been looking at Phoenix? How many years or decades?
Well, I got licensed in 2007. So I've had to follow it for some time, but it wasn't until I got my brokerage that I really started looking at the statistics. And so that's back in 2013. And I really wish I learned the statistics back in 2007, because I would not have lost so much at that time.
You would have been able to see that 2007 wasn't the great buying opportunity you might have thought it was.
Correct.
No, that's an honest reflection. That's all good. But the fact that you've looked at Phoenix, I'll call it a decade for a rounding error, should be interesting to folks. Because again, at least in my perspective, Fresno, the only market I know in any detail, 2010 was, I'll call it the bottom, right? People had finally come out. The hedge funds finally started showing up, buying entire tranches of homes. Sight unseen. It was just weird, right? One day I'm buying 5 a week, and then the next day I don't see anything. It's like, what happened? And then you've rode that wave through 2020. So before we get into 2020, which is much of this conversation, what did that look like? Was it a roller coaster, like highs and lows in Phoenix? Was it a steady uptick? What was 2010 to 2020 like?
2010, we were at the bottom or near bottom, and we hit this steady wave. Not steady wave. It was pretty much like overnight, where things turned around. I remember Michael.
It came out of nowhere. It was like, what happened?
Yeah, I think it was 2011. We had Michael Orr, who runs the Comfort Report, which is what the statistics I'm reading and sharing. He said, we're going to have 20% appreciation this year. I was like, this guy is a whack job. What the hell is he talking about? There's no way.
Yeah.
And he was right.
Yeah.
And he was the one that predicted the crash. I was like, the numbers don't look good. It's going to be a massive downturn. I was like, okay, I hate these, negative news, whatever. Yeah. And then he was the one that said, we're going to have this massive turnaround. And I said, this guy's crazy. And since he was right on both counts, I read his stuff almost religiously.
Exactly. Man, you got it right twice. I'm following you.
Yeah, exactly. But yeah,
So
we had this 20%. It came out of nowhere, like you
right.
said.
Yeah, it was good.
It was, and I had properties. We had a rental property that we short sold, that we did a short sale on. That
Hmm.
we would have waited just a couple of months, it would have been fine.
It'd have been fine.
Yeah.
Man. So where did Phoenix? So what was, if you remembered? If you don't, you can just guess. What was the median Phoenix home in 2010, 11? Was it like 180 ish?
I would say in the 180 range. Yeah,
Yeah.
it would have been around there. Maybe even lower, maybe even 160,
Okay.
because we've had over the last 10 years 100% appreciation. Right,
Okay.
prices are double what they were 10 years ago, and the median price today is 305, which is a record. We've never been this high before.
Wow. So we're going to dig into that for sure. 305, a record, just like Vegas. I don't know if you saw, but Brian Lebo's a broker I talk to about once a month in Vegas. They just had 325. Their record took out 2006, took out the
Really?
peak from '06. Yeah, 325.
Which is so weird given this market that we're in,
I
or
don't,
not this market, this economic
this time
world
frame,
we're
this
in.
this bubble. I mean, in Vegas is 20% unemployment. At least Phoenix is not 20% unemployment.
Yeah,
I mean, it's mind-boggling, right?
it
Uh,
is.
so okay, so Phoenix goes, let's call it 160 to 305. Have you seen was it just like a steady uptick, 20% the first year? Did it level off? Or did you see a lot of it, I guess, in the beginning and recently, I guess is what I'm asking.
We had the crazy rise,
Yep.
and it's been a steady increase, except for I want to say, well, I guess the first time homebuyer program was before that. So we had some craziness with the first time homebuyer program where you could see the stimulus there, but it's pretty consistent as far as sellers market. We had a moment, I can't remember what year it was, where we had a balanced market,
Yeah.
but we haven't had a buyer's market in a decade.
Yeah. Yeah. And then again, so let's get to 2020. So why don't we talk about some of the numbers you saw? I saw you did a report. I think they were June numbers, right? You did the video
Yes.
in July, but they were June numbers. Why don't
Yep.
you highlight a few of those? Because I was shocked when I watched that.
Yeah, I would say the biggest thing is that it's as if COVID never happened, because we had this rise
Mm-hmm.
and then we had this valley, right, which is COVID.
Yep.
And, I reference back all the time, March 12th, right, is we got Tom Hanks and the NBA shutting down, right? That was March 12th.
I remember. Yep.
Right. And so March 17th was our peak in the Phoenix market. And then it just slowed down. And it slowed down because buyers are kind of scared, and the sellers are like, I don't want to put my house in the market. Yeah. So we had this drop on the supply side, but we had a big drop on the demand side for about a month and a half. And then, we all got, what was it? We all got tired.
Yeah.
Right. Of waiting.
Yeah. I want to scratch that a little bit because at least in my market, again, it'd be fun to talk about Phoenix. What I saw is the buyers got tired, but the sellers, I don't know what's going on. At least in my market, the sellers or listings, active listings are 30% below what they were in January. And January was already a record low. So it's like, what is going on with this supply demand picture? It's freaking crazy.
The supply side makes the most sense to me. And this is kind of what I thought was going to happen. I was wrong. I thought the buyers wouldn't care as much, but the sellers, like if you're a homeowner, people are walking through your house.
Yeah, that's true.
So, the likelihood of you getting sick from this is much higher than if you're a buyer walking through a bunch of people's houses. You just put your mask on for a few hours and then you're done.
Right.
So
that's a good point. Okay.
So I thought on the buyers, I never thought the buyer drop would be as big as it was. But the seller side, I that's what I had expected. That's what I anticipated. Okay. But I think everybody just got tired of the COVID, mania.
Right.
And so right now the supply is low, but it's lower than it was. So we went from 14,000 to 11,000 listings. Okay. By March.
Yeah.
And then we're like, holy crap, what's going on? So we went from 11,000 back to 14,000.
Oh, okay.
Right. Which we would expect, we were expected to continue to go down. And then we shot from 14,000 in April to 11,000 in May to 8,000 last month or beginning of July.
Active listings.
Yeah. So right now we have 8,900 active listings in our market.
Wow. So that's exactly, the ratio is very similar to my market. I've been doing it 20 years in my market. I've looked every day for nearly 20 years. I've never seen it like this. And I was buying back in 2003, right? Pre-crisis.
Yeah.
I mean, I don't see how we don't have double-digit price increases in much of the U.S. this year.
Well, I think there's a couple different things working though.
Okay.
We have a lot of people moving here from California.
Exactly.
A
Oh
lot of
yeah.
people tired of the politics.
Oh, amen.
Every time, and this, I don't want to get too political, but every time someone says defund the police in these other states, I'm thinking yes, because we're driving prices up in Arizona,
Exactly. Yep.
right? Because no one wants to live really in a police-free state.
Yeah.
So we've got people coming in from Washington still, people coming from Illinois, coming in. I think once you get east of Illinois, they move to Florida,
Then we'll go to Florida. Yeah. Yeah.
right?
Yep.
But if you're in Illinois and west, then everyone moves here because we've got mostly good weather, right?
Yeah.
We got 5 months of summer, but mostly good weather. There's no ice here.
Yeah.
And then we're just affordable.
Yeah.
And we are a middle of the road state,
No
relatively
question.
speaking.
Yeah, and
we love jobs here.
Yeah, I believe Phoenix, specifically Phoenix, Arizona, bigger, and Texas are going to get a disproportionate share of Southern California and California residents. California has seen the peak. The big tech workers are being told they can work from anywhere. What is going on in California, and I can say this as a 50-year vet of California, is crazy. And if you don't have to work here, I mean, you're going to get people renting shoeboxes in San Francisco, owning in Phoenix.
Yeah.
That fundamental change is, really.
Well, yeah. So one of my top agents in our office is working with two buyers, one from Washington and one from, I think, Oregon.
Okay.
And they both just had their employer say, we don't care if you work in the office anymore. Mm-hmm. So they don't have to live in Washington and Oregon anymore. And coming from Washington, they're buying $1 million house here. So the guy from Washington is buying $1 million house. The guy from Oregon is buying an $800,000 house because the income that they make over there translates very well.
Yeah.
In Arizona.
Yeah. So again, I don't see your supply picture getting any better.
No, I don't.
More, because you're going to have, I don't know how long it lasts, but it's long because real estate doesn't move like stocks. Mm-hmm. You've got somewhere between 3 and 8 quarters of just net migration on top of what you originally had, because Arizona was already a positive migration spot. So get ready to be busy. So I'm curious what's happening with builders though. Have you seen them ramp new construction yet to kind of meet this new wave yet? Or is it too soon?
Have been, and they will continue to. Yeah. Like they know, like there's lotteries right now. When we had lotteries,
wow.
Last time we had lotteries, it was 2005 and 6.
There you go. That's a sign.
We have lotteries again for new builds. Like you showing up at 8 a.m. or sleeping over the night before the opening is no longer good enough.
Wow.
Yeah.
Wow. So, okay. So again, I mean, just supply demand picture says Phoenix, greater part of Arizona, rises for the next year or so. My crystal ball doesn't go further, but the supply demand picture says it has to, right? I mean, I don't know how.
Well, it has to. Well, and the thing that's interesting is our demand is actually normal. It's not even high. Our demand is normal.
Really?
But our supply is less than half of what we really need to satisfy, right? I think, if you look at our population, just shy of 5 million people.
Yeah.
And you look at single family homes under 300,000, we have like 1,100.
Oh, yeah, that's days of inventory, not even weeks or months. Talk about an unbalanced market. Wow, man. Okay, so it's abnormal, right? This is not what you would expect in the middle of a health crisis, I would think.
No, this is totally unanticipated. We never would have thought that it would be hotter now, because I mean, once COVID struck, and we saw all the supply steadily increasing and the buyers freaking out, I was thinking, okay, well, this is gonna be a lost year.
Yes, I actually remember I watched one of your videos on Facebook. You're like, this could be a lost year. I'm like, you know what? He could be right, but whoops.
But no. We're very impatient as a country, and this in Arizona,
myself included.
Yeah, Arizona has pretty much. We're number 1 right now, right, in the news for Corona. But even though we're number 1 in the news for Corona, everyone here is like, it's not that bad, because like we know people who get it, and the people we know that get it are recovering.
Yeah.
So
there you go.
And we have like a pretty good dashboard for the virus in Arizona, so you can actually look at every day and see how many people got it in the last few days,
Yeah.
what our hospitalization rate. So, I think we're getting slammed for poor testing, and I think that's rightfully so. But then you look at the statistics and you're like, okay, well, people are dying,
Yeah.
but it's nowhere near what the media says.
Right. Yeah. The media, the media is a for-profit entity. And
Right.
unfortunately, in our psyche, negative information or fear gets more clicks and eyeballs or whatever you want to call it, right? Which leads to ad revenue. That's just the facts of life.
Yeah.
But yeah, as a real estate investor or frankly an owner, you're not going to be making a decision based on the next month or 2 months or even the rest of 2020, right? I make purchase decisions thinking I'm going to own them forever.
You're Warren Buffett.
Yeah, that's what I'm thinking, right?
Yeah.
So if you're going to be investing in a market like Phoenix, where you're going to have net migrations from wealthy states, it's probably a good time to get in. Do you have any idea what rentals are like in Phoenix, or just owners?
Man, rentals aren't great.
Okay.
So this is not a great market to buy rentals. I mean, there's still hedge funds buying. And I think that's probably one of the reasons why it's not so great. It's because the hedge funds are buying based on those metrics.
They overpay.
They screw the numbers up. So if you're buying for cash flow, there's many, many other markets that are better.
Okay.
But if you're buying for appreciation, I'm feeling pretty good right now. And we don't recommend necessarily buying on appreciation. Yeah. But if that's something that you're looking for,
yeah,
it's great.
Well,
so
if you're going to be an owner occupant, you're going to live somewhere, and you want to go from renting to owning, you might as well pick a place that has appreciation on its side.
Yes, for sure. Absolutely. Yeah.
So do me a favor. I didn't do this in the beginning. I should have. How can people get a hold of you, reach out to you? 1% of Phoenix people need to be looking at you. People watch this from across the country. How can they do that?
Yeah. The best way is on Instagram at steve.trang, steve.trang. Or you can look me up on Facebook. Okay. I'm fairly active on social media.
Okay.
So that's the best way to get a hold of me.
Is there an office number maybe they can call if they just want to start looking for homes? Or do you want to do Instagram and Facebook?
I'll start there.
No problem.
I'm horrible. My phone's on do not disturb 24/7.
I get it. All right. Well, I will put your Instagram handle in the first line of the description for you if people want that. Cool. Yeah. So, where do you see Phoenix going? Is it just you're off to the races now, and you're just?
Yeah, I would say I think this COVID thing is slowly dwindling. You kind of see it across the country, across the world. People, the body, the human, whatever. We're adapting, we're adjusting, right? So right. I think in 6 months we're all going to be equally handicapped by it, so it won't be a factor.
Okay.
So then you look at as far as cost of living.
Yep.
We're very, very affordable. And then you look at, again, all these other states, whether due to social policies or it just doesn't make sense to live there anymore.
Yeah.
Arizona and Florida are the two states. And, it looks like, maybe the Mississippi is what decides
that's fair.
where you go. But I think we're just going to continue to have this problem. And, being a pro jobs state,
yes,
we're just going to continue to, we have so many companies here saying we're tired of X and they move here.
Right.
And and as long as that continues to happen, our prices are going to continue to increase because there's just not enough houses for all the people here.
Yeah. Can you, I don't know this. What is state income tax in Arizona? Do you know the range of taxes like? Cause
property taxes are supposed to be 1% of the property value.
All right.
But it's really 1% of the assessed value. Because it's 1% of the assessed value is typically about 65 to 75% of the market of the retail.
Okay.
So your property taxes are really going to be around 0.7%.
Not bad.
Right. And then the income tax, I think the top is like 6.8.
Okay.
But really most people are like in the 2 to 3.
Got it.
Which is a quarter of what it is in California.
Yeah. Yeah. And again, you can get into a reasonably priced house in Phoenix for under $500,000.
You can get into an amazing house for $500,000.
Yeah. And why that's important is because I think we're going to see a trend from California renters becoming owners in Phoenix. And that's That's just good across the board,
Yeah.
in my opinion. And
Yeah.
then
Home ownership is awesome.
yeah, I mean, it has all these other benefits, and it's wealth building, and you get, the forced savings account and all these other things, and you get roots, and you could paint it what you want, and you can get a pet, and blah, 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 blah. And you're not in a shoebox. You're in this. I mean,
You're not waiting for a landlord to make the repairs.
yeah, exactly. We should be thankful. I mean, I frankly think it's a good thing. Seeing more people become owners versus renters is a good thing. And who would have guessed it was a virus that sort of is the thing that makes this all happen? This market is across the country is going not how I expected. Supply is so low.
Totally bonkers.
Just crazy. What about the ultra high end? Have you seen any slowdown? Call it, I don't know what it'd be in Phoenix, 2 million?
The ultra high end took a big hit.
Okay.
Big hit once COVID hit. But it's back already, which again, flabbergasted. Yeah. I thought that market was screwed, particularly this time of year. This is the time of year where nothing sells in luxury.
Yeah.
And, and it's selling again.
And yeah, I would have thought that too, because jumbo loans, right? Jumbo loans is pretty tough to get these days.
Well, that was one of the first things to go away.
Yeah.
Right. The bank started preparing for this upcoming crisis. And part of their preparation for the upcoming crisis was, let's not do any more risky loans, which jumbo falls in that category.
No question.
But, we know historically, you're talking about luxury, more than half of them are actually bought in cash. So true. I guess that hasn't really changed.
And probably the other half of the half could buy it cash if they wanted to, right?
Yeah. Well, and a lot of people's wealth in the luxury market is tied to the stock market, and our stock market has recovered.
Yeah, it's no question we're in a V-shaped recovery in the stock market. Well, a V or a W. We'll see.
If it's W, well, we're finishing the first V.
Yeah, exactly. We've gotten to the peak. So the other thing I'm wondering about is any idea, and if you don't have this numbers, no problem, but forbearance is real, right? Yep. There are a lot of people that were in retail or restaurants that had to request forbearance. Have you been able to uncover or unscratch what that might be in Phoenix? Is it 2%, 5%? Do you have any idea?
I think the number I have is national. I think it was, we went as high as 6%.
Yeah.
And I think they went down. But the unofficial numbers, this isn't published, right? Yeah. This is like what we're hearing. And what we're hearing is around like 2-3%.
Yeah. In Phoenix, that would probably make sense.
Because we haven't had, there's a lot of, we're not a big touristy town.
Right.
Right. And then a lot of the restaurants pivoted to delivery
and outdoor dining now. And
yeah. So what I'm hearing is we're about half of what the national rate is.
That would make sense. I think the touristy towns are going to get hit the most. Think cities in Florida and Vegas. I mean, Vegas is Brian Lebo, again, a peer of yours just on the Vegas market. He's talking 15% of housing. And the reason this question is important is because that is future pain. Right? That is pain that has been successfully hidden or delayed, because at least in Vegas, a lot of those jobs aren't coming back soon. Right. So there's probably short sale and foreclosures early next year, I'm guessing.
They're not, but I think we talked about this last time, was that the banks are smart, right? They're tacking on to the back end, which they did make that decision, right? Yep. If it's Fannie or Freddie, they're tacking on to the back end.
Government backed, yep, they did.
And I think the private ones that are not government backed are the ones that are usually smarter. And so they'll probably tack it onto the back end. So the people that lost their jobs, the real unemployment numbers, they're going to lose their homes, but they have equity. So we're not going to have this foreclosure crisis the same way because they have options now.
Exactly. Yeah, that will be the listing. That could be the listing spike we desperately need.
Right, exactly. So I don't think it's going to be as bad because we have this low supply and we have people with equity. I think that there's a lot of people licking their lips, getting ready, and I think they're going to be disappointed.
I agree with you 100%. I've come out pretty hard that way the last 2 months, that having successfully avoided and then prospered in the last crisis, this is not that. You will not see the same. You will find occasionally a deal that falls through the cracks that's a home run, but it's not going to be like last time where I would buy stuff for a month out of the MLS. It's just not going to be that way.
Well, and
go ahead.
And nothing's happening at the auction steps. Like,
no,
just forget that.
Not going to make it there.
That's not going to happen.
No, not going to make it there. Will not be last time. But if we flip the script, where I am saying the pain will be is in what was called value add multifamily. So maybe in Phoenix, this is apartment buildings bought in or built in the 80s, right? So they're just older, probably B class. There's a lot of syndications that went off and bought multifamily with bridge debt, 3-year debt, that aren't going to be able to refi, because just like jumbos that went away, some of that agency debt has gotten a lot more restrictive. And I think the pain's in commercial, because not only multifamily, but retail and restaurants and big box stores, just not a lot of people paying rent.
Well, I haven't heard a lot of people talk about this, but this was shared in a mastermind I'm in. What's the scariest? Retail is scary, right? Office hasn't been hit that bad. Industrial's totally fine. Right? Retail got hammered, but what's getting hammered way worse than retail is hotels.
Oh, hospitality. Yes.
That industry and those defaults have been way bigger. Oh, but no one's talking about hotels.
Yeah, I read some commercial paper notes that they're already in the double digits already.
Yeah.
Right. That's pretty amazing. So yeah, hotel, hospitality, big trouble. I think retail, especially if it's at least where I live, it's been around a while. So it's all interior malls. The exterior malls are probably okay. And then we'll see some pain. Again, I think we'll see pain everywhere your city's vertical, right? So think San Francisco and New York. Again, I think the vertical living in this crisis is out. People are getting out of shoeboxes and going to places like Phoenix.
Well, they're revisiting, right? Like there's this thing like I'm living in an apartment or a condo, and social distancing is becoming a way of life, and maybe they'll get used to it, but they don't know if they want to live that life anymore, where you guys share a common air conditioner and you're spending this much time in an elevator with a stranger. Well, your neighbors, but
strangers.
But do you want to put yourself in a situation where if there's another pandemic, do you want to live in close quarters with a whole bunch of people? Social distancing was not an option in New York City.
No, you couldn't do it. No, my daughter's there. No, she couldn't do it. 6 feet? Are you kidding me? You'd be in the water pretty soon, the Hudson or something.
Right. So I think people are going to look at that and say, it doesn't have to be half. It could be just like 3% of it. That's a lot of people.
That's a lot of people. Well, here's the real rub. I think all of what you said is true. You layer on top of that the people that have kids, and now you're looking at homeschooling, and you still have to do your job, and you have to do a Zoom conference call, and you.
Yeah.
Done. I'm out. Uncle, I give up. We're going to Phoenix.
Right. Yeah, exactly.
Yeah. I think most of the country is going to see price appreciation. The vertical cities will see price depreciation. That's just where we're going. I
think we're already seeing that in New York.
Oh, for sure. And San Francisco. Yeah. And San Francisco. So what else is telling about what's going on in Phoenix that either surprised you or you see coming? Anything interesting?
No, I think that was the biggest thing, was just how we reacted. I think we talked about this last time, us being, even though we're an even state, we're more red than blue.
Sure.
Just everyone was skeptical of the news, and you can see it by our behavior.
Yeah.
And I think just the fact that we were I have friends that know Governor Ducey. Okay. So I'm like, why is he doing this? And they'll tell me. And, he only had a shutdown because the president said to have a shutdown. And we opened up once the president said, we don't need to shut down anymore. He couldn't go any further. He could not be left he couldn't be more extreme than the president. So whatever the president said, he had to go with that. Right.
Right.
But if the president never said we needed a national shutdown, we never would have even shut down.
Ah, there you go.
Right. And so I think our behavior, like I said, we're number one in the country in percentage increase, not new cases. Yeah. Right, which no one cares about new cases, but percentage growth.
Yeah.
And I think just it's interesting to see how people react with the same set of information.
Yeah. Oh man, this has been fun. Again, this real estate market surprised me. Again, going into this, I thought buyers and sellers would retreat, and I did not see the buyers coming back so fast. Again, it's human nature, I guess. I
With
should
such
have known better.
force.
Yeah, with so much force.
Yeah, we went up just as fast as we went down.
That is amazing. And now you have less supply than you did heading in, which is just bonkers.
Yep.
Bonkers.
Exactly.
All right, man. Well, Steve, this has been so much fun. I look forward to your monthly Facebook charts and posts. 10 or 12 minutes is pretty awesome. So thank you for doing that. And
Absolutely.
good luck with the rest of the year, man.
All right. Thank you. You too.
Thank you.